Right folks, let's take a look at a less than ideal example. Coming into this trading session, we can see that price has already taken out the previous day's high. It's tried making higher highs, it's making lower lows. Generally speaking, price is still range bound. So the first thing that I want to do is mark off the previous swing high and the previous swing low to be made, which was during yesterday's price act, or the end of yesterday's trading session. Now as you can see, price has just taken out yesterday's high, this solid red line here. Taken out the high, made a higher low, higher high. But I'm not around to trade that. Time on the chart, it's about 6:30 here, 6:37. So what I want to do is I just want to include these attempted higher highs as my breakouts levels, or my resistance highs and my support lows still remains the same. So it's a less than perfect example on today. It's already tried to break out through yesterday's high-low range, but price is still range bound. It's making high low, higher high, then it's making lower lows for the at this point of the chart, and it's just starting to put in higher highs, higher lows. So it's not trending up, it's not really trending down. It's still technically, as far as I'm concerned, range bound. It's not making new highs, it's not making new lows. So I'm just using a little bit of common sense, reading what's on the chart, taking into account a less than perfect situation, but price is still range bound at the high end of the previous day's high-low range. So just also to highlight why we wouldn't bracket the range. All the textbooks say identify a range, bracket the range. You place a buy order above, sell order below. Walk away, come back later in the day, see if you've made some money. That's what the textbooks say. Really, really loose description of how to trade these ranges. So as the chart unfolds, if you have placed a buy order above and a sell order below, look what happens. Price would get you in to a move above the range, so you'd be long with a stop loss typically below the low of the overnight range, or to be fair 50% of the range, to give you that 2-to-1 risk reward ratio. So you'd be stopped out at 50%, just takes the low of the overnight range out. Some people also decide to adopt a stop and reverse strategy. So if the long didn't work, then the short must work. If it's not going up, it must be going down. So you've got long on a bracket of the range. You've now been stopped out and short. And to be fair, if you had your stop loss at 50% of the range, you'd be stopped out there. Price again takes the low of the range out. Anyone who's not already gone short will have got short. Then takes the high of the range out again. So any of the shorters have got the stops above the high of the range. Now they've been stopped out. And they think, oh, hold on, if it's not going down, it must be going up. So now they've stopped and reversed the trade, and they're now long. And then look what happens, price sells off. So we've got one breakout attempt to the long side, once the short, didn't quite make it the next time round, another short breakout attempt, so 1, 2, 3, 4, and then the fifth move eventually would have given you the move. Now by that time, after 5 losing trades on the trot, most people would have just decided to walk away and forget about it. But as we're waiting for, sensible traders are waiting for a breakout pullback. You've got the breakout, price pulls back, doesn't trigger the trade. Breakout to the downside, price pulls back, doesn't trigger the trade. Another breakout to a new low, price breaks out, pulls back, doesn't trigger the trade. Breaks out to the high, breaks out to a new high for the day. Price breaks out, pulls back, doesn't trigger the trade. Price breaks out, could have got an entry on the lower time frames, but there's the pullback on the 15-minute chart. Price breaks out, pulls back, and off it goes. So by waiting for the pullback, you've avoided 1, 2, 3, 4 failed or false breakout attempts just by not doing what the textbook says. And the textbook says bracket a range. So that's really the main pitfall of bracketing a range, or just literally placing a buy and a sell order above or below the range when you've identified it. Now in fairness, this is an extreme example. you'd usually see 1 or 2 failed breakout attempts. So how can we treat this as an individual trader when we're looking for breakout pullback setup? Let's just scroll back in time. So on the first, let's just go through it as if it was real time. So on the first breakout attempt, you've got breakouts, you'd be looking for the pullback. That doesn't trigger, then breaks the low of the range. So if it goes through the high of the range, I'm just going to adjust, take new information into account, and look for a second breakout attempt to a new high. Now what I'm doing by expanding where the range location is, I'm trying to identify where genuine support and genuine resistance is. Breakout to the downside now, travels up. It travels up again, doesn't trigger. Another breakout to a new low, again, breakout to a new low, price rallies up, makes a new high. So you're looking for the breakout pullback setup. This one doesn't trigger, comes back down to the low of the range. So again, if it does go up, again, I'm going to take a breakout to a new high and take a second breakout attempt. And in this case, as we know, we've already seen it, price breaks out, pulls back to the downside, and carries on its jolly way. So pitfalls to avoid by bracketing the range, or by not bracketing the range, more to the point, is you will avoid many losing trades. And it is, as far as I'm concerned, the quickest way to ruin. Doesn't mean that the breakout pullback setup is any it doesn't mean that the breakout pullback setup doesn't see its fair share of losses. What it does mean is that we can avoid the silly pitfalls of bracketing the range and also give us a reduced risk entry opportunity when price is telling us it's making higher highs, higher lows, trending out of the move, or making lower highs, lower lows, trending down on a breakout to the downside. And if price had continued to be in range bounds, we will have managed to avoid many losing trades by not bracketing the range. That's it, folks. That's the breakout pullback setup of the overnight trading range, or the Asian session range, and also some of the pitfalls to avoid by not bracketing the range, and the main reason why I wait for the pullback. Hope you enjoyed it, folks. If you've got any questions, comments, please feel free to contact me on my website. Thank you very much for your time, and I'll speak to you all soon.